Hi, my name is Paul Atherley. I'm the chairman of Pensana Plc. We're listed on the standard list of the London Stock Exchange. We're developing what we think is the world's most exciting new rare earth project. We have a very, very large deposit in Angola, which is right next door to a railway line that's feeding into a port. We'll be sending a very, very high value product to a brand new plant in the UK in the Saltend Chemicals Park. And it's looking to produce 4,500 tons of rare earth magnet metals at a time when there's huge demand for those from electric vehicles and offshore wind. Very nice to be here, Matt.
Good to see you. Been a while.
Long while. Nice to get you out of your bedroom and actually into the city.
I know, and with trousers on and everything. So, lovely image, right? Look, it's good to catch up, but we haven't seen you for a long time for a reason. You've been busy. Didn't feel you had much to say. Now you do. What's the news?
I think that's right. I think what you didn't want to hear from us was continual updates on how the study work was going. So we've now just put out an announcement of the feed. So we've now, I think we've got 70 or 80 equipment packages all finalised. And the team's done a great job because they actually managed to reduce the capital cost from just over $500 million to just under $500 million. So we've now got that locked in. And we're now in financing stage, which you and I talked about all those years ago, and close to being able to start construction.
But some things have changed, right? So the sort of looking east towards China, that's no longer on the table. Because the geopolitics has definitely changed of late, but the market opportunities have changed for you because there's realization that perhaps you can capture more of the downstream value.
Yes, that's the big step change. So when we got hold of the deposit, we drilled it out and found out we've got a very large carbonatite. It's this neodymium, praseodymium material, and you can sell it in basically three different forms. You can produce a concentrate on the mine and then ship that off to China, and you get a sort of low value for that, so maybe $5,000 a ton or something for it. Or we thought, well, rather than do that and have very limited margin, go to the next stage and you produce a mixed rare earth carbonate or a mixed rare earth sulfate, and you can get maybe $10,000 a ton for it. But it was interesting, when we looked at the economics, we found that the real value uplift was in the separation. And the separation was all being done in China. So we asked ourselves the question, why can't we do the separation? So we undertook a study and had a look at chemical parks in Europe. And we looked in Saxony, Merseyside, Teesside and Humber. And we found this chemical park in Saltend Chemical Parks, the ex-BP Chemicals Park.
Humber.
Humber yes. And all that. And it was coincidental when we arrived there, we found that it was owned by a private equity group. And they said, this is great. You can put your separation facility on our park and we'll provide you all the services. So it was basically a plug and play or a we work for chemicals parks without the free beer and the charismatic CEO. And what happened then was it became clear that there was something more to Saltend than just a chemicals park. It was on the verge of becoming a free port. Right. So we joined up with AB, Associated British Ports and KPMG and others and worked with them. And I'm very pleased to say that Humber, I think, was the first or certainly one of the first 8 of the free ports. And what that did, it gave us the possibility of treating Saltend as a processing hub for rare earths. So we've now got a separation facility. It's world-class in size. It will produce 4,500 tons of neodymium, praseodymium oxide. It's about the same as Linus Corporation and NP Materials. But here's the difference. We're in a free port, so we can bring material in from Longonjo, from our Angola mine, but also bring in material from other places in the world. So in this post-Brexit world, we're creating a high-value manufacturing, if you like, within a chemicals park, within a free port, within the UK.
Right, and the UK government's sort of stepping up with a few subsidies. And
not yet.
Not yet, I hope so. Okay,
right.
I saw some big numbers.
Yes,
I hope they do. Let's talk about that, because going toe-to-toe against Linus have been doing this a while, and MP or Mountain Pass of old, they learned the hard way, made a few mistakes along the way, bit of a dent in the balance sheet. But obviously, they're the two sort of standout companies in terms of the rare earths outside of China, ex-China. Okay, there's not too many other. There's lots of conversations, but no one actually doing it. You're saying we can out of the gate match those guys. 4,500. I mean, that's big, right? What's driving that confidence?
So first of all, I think most junior rare earth companies are confident at the concentrate stage, mining and floating a concentrate, even though floating a rare earth concentrate is not easy, but most companies can do that. The next step to a mixed rare earth carbonate or a mixed rare earth sulfate is basically not that different to the mineral sands industry. So it's a sort of known process route, if you like. So it's not too complicated. So the question you're asking is, how do we think we can separate? How do you think we can do this
at scale,
at world-class scale? And there's two answers to that. One is separation is chemistry. So you need to be in a chemicals park. You need to have all the support and services. You need to have the whole infrastructure around that. And secondly, you need a team of people who know how to do it. And so that's why we recruited Rocky Smith, who's our star. He's the ex-CEO of Mountain Pass. He actually built that plant, and he's a very experienced chemical engineer. And he's bringing his skills and a team of people to bring those separation skills to us. So the reality is there hasn't been a rare earth separation facility built outside China for over 20 years. So there isn't a body of people who've got those skills. So we like to think we've got the right person in the right environment, that is in a chemicals park, to be able to match Linus and MP.
Right, and what's he saying about the kind of ramp up to this? Because one, you got to go and get the money now, right? So just shy of 500 million now. You knocked a few quid off of the previous number. You're going to get, well, first of all, where's that money going to come from? Because it gets now a European story or a North American story, no longer China's story, but there's some Chinese money still involved?
So no Chinese involved. It's all European. Basically, the simple answer is we've announced that we're working with ABG Sundal Collier, who's a major bond financier. And I can tell you roughly we'll be looking at half bond finance. And then we've got a
green bonds?
They will be very green, extremely deep green, bright green.
I thought they might be.
And the rest of it is a combination of various forms of finance that will largely focus on Angola. So there are bilateral agencies, there are banks, there are all sorts of people who have who take on the Angola piece. Right. So, and the second thing is...
So can I just check, so the Angolan sovereign wealth funds in there, but across Africa there are...
No, I haven't, in that summary, I've not included them.
Okay.
What I'm saying to you is we went from an Australian junior when I spoke to you before. We've now begin the journey of institutionalizing the register. So we now have the Angolan Sovereign Wealth Fund owns 20% of the company. We have Artisan Partners from the US, it's a $180 billion fund, and more recently M&G. So in total, they're about 35% of the company. Over the next couple of months, we expect to build that up to closer to 70% institutionally held. So overall, we see the financing as half bond finance.
Right.
The other half will be a mix of individual financing components, which I won't go into, but they relate to Angola. Companies, bilateral agencies, banks, and other organizations have an interest in financing that. Right. And then whatever's left over will be the equity piece. And the equity piece will be from the existing shareholders within the company, those institutional shareholders.
Okay. So not quite sure of the construct of that yet, but those will be the moving parts involved in the conversation.
Broadly, the headline is half bond, and then the other half is that mix I've indicated to you.
Right.
Different components, all adding up to the 500.
Right. So there's two bits that obviously, there's a big audience here who won't have heard the story before, so we're just going to go back a little bit. So with the Angola piece, that obviously you've talked about previously about the infrastructure in terms of road, the hydro, the port, etc. That's all in place. You didn't have to finance that, but you can utilize that. So is the Angola piece? Well, you've got to build something there, haven't you?
We've got to build a mine concentrator,
which is how much?
MRES circuit.
How much is that?
Broadly, just over 200, just on the 200 mark.
Okay, and then we go to Humber, to the UK, and that is the bulk of the balance.
Well, it's the 200. It's another 200, and then you've got 100 spread between the two.
For what?
For working capital, all the privies. So hard capital, 200 each, and there's 100 spread across the two.
Right. So those will be, well, I assume you're going to break ground soon, but they will be built out at the same time, same delivery time?
Yes.
Okay, which is what?
18 months.
Okay. And then we've got to come back to may I give you a clue what I was going to ask about, which is the ramp up period, because it is technical. It's very technical in the sense that you've said there's not many people with skills outside of China who are able to put this together. So you've got to put this thing together at scale. It's going to be built in 18 months. And then you've kind of got a ramp up period of just trying to work out and refine and how you get it right.
We haven't specified what the ramp up period would be, but I'm saying to you, we're talking 12 months, maybe longer.
To get to nameplate capacity?
To get to nameplate.
Right. And then so it's a big project. So payback is how long? Return on capital is how long?
Less than 2 years.
Okay. Right. Okay.
This is extremely profitable. I mean, it's 4,500 tons per annum of just the NdPr. Just left aside all the other products that we're going to sell because most of the value is in the NdPr. But the current price of that is well in excess of $150,000 a ton. And rising. So it's 3 times the revenue stream from when I last spoke to you.
Yeah.
So it's extremely profitable. In fact, we probably only need to sell of the $4,500 tons, we probably need to sell 500 to 1,000 tons in that first year to cover all our costs.
So with the money that you're raising, do any of those groups need to see offtake agreements in place before they, commitment is one thing, cash is another. So
that's right. So in the announcement we made the other day, we talked about we've got 50% offtake and marketing agreement with a major trading house, and obviously that's baked into that are the requirements for our bond financiers.
Right.
So yes, they go hand in hand, and we've been working on that for quite some time.
Right, and the balance you're happy to sell in the market, or will you be looking for contracts to take up the bulk?
Of the non-committed 50%, to be honest with you, we actually have quite a few people approaching us wanting to secure that. So between now and when we get into production, I don't think we'll be completely exposed to spot because there's so much interest in the offtake. So the answer is right now for the financing, to answer your question, 50% overall marketing agreement, and within that, the offtake requirements for the bond financing.
And are you seeing more inbound from whether it be magnet producers, even the automotives themselves directly, because everyone's trying to nail down supply chain. Because all we're hearing is supply, demand, deficit. You name the commodity, that's the conversation we're having.
So 2 years ago, I was talking about this obsession that automotive manufacturers have got with all the different varying raw material content for their batteries. Talking about NMC 811, and they're focused. The purchasing managers are focused on where they're going to get the manganese, the nickel, and the cobalt from, and the lithium. But I was making the point was all the battery does is produce electricity. What makes a car go is the copper and the permanent magnets in the axial motor. So now it's suddenly changed. Now we have the purchasing managers of a range of major automotive manufacturers approaching us to do exactly what you just said, to secure their supply chain. We also are being approached by magnet manufacturers and people who are looking to establish non-Chinese magnet production, because at the moment China makes 90% of the world's magnets. And just on that, just to understand, and this has been in our presentation for nearly 2 years now, we're making the point, China's spending $11 trillion on decarbonizing its own economy, its 2060 carbon zero plan. They make the point, as part of that, they don't feel any obligation to supply magnets to the rest of the world. So there's a clear message. There aren't going to be any magnets available from China. So it doesn't surprise me that the original equipment manufacturers are now reaching upstream in the rare earth sector and saying, hey, can you help us secure our supply chain?
It's interesting. I only found out last week magnets are made under license. Who knew? I didn't. Okay. Right, okay, so can we talk about a little bit about the macro in case of what you're going to be based in the UK. We're sort of in Europe. They'll still talk to us, I'm sure. Where that would be the obvious place for your product to go. But the US is feeling slightly nervous, especially recently with recent geopolitical events, which we won't go into, where they're trying to nail down their friends of the US. Are you finding or do you think you'll be able to take advantage of some kind of competitive tension there? Do you care where you sell it? I mean, how do you play it?
So number one, we really do care where we sell it because we're trying to create the world's first independent and sustainable supply chain. And that means independent of China, frankly.
Right.
And so to do that, we need all parts of our supply chain, including our offtake, to be non-Chinese. And so we are having those conversations with those parts of the world that make magnets that are non-Chinese, which aren't very many. But there is a clear push by both European, US, and Japanese magnet manufacturers to create capacity ex-China in Europe and North America, and obviously we're talking to them. And then the final one is the competitive tension. The tension is going to become between the purchasers of our product. They're coming to us and saying, can you supply? So the automotive manufacturers are asking the question, when are you going to be production? How much you can produce? How much can you provide us?
It's an interesting position to be in. I think we're in halcyon days for the metals market broadly, certainly battery and automotive related commodities. But prices are moving at extraordinary rates. We saw what happened with LME and nickel last week. Extraordinary situation. Copper price going through the roof. Lithium has been on a run. All the commodities have been on a run at the moment, right? So do you feel that the non-committed, either the non-trader contract, is best left in the open because you sense that there's going to be a shortage? Or are you happy to get it committed now and you know where you stand?
So it's such a good question, because right now, for it to give our financiers what they want, we need commitment. But I sat in front of a fund manager 2 days ago, and the fund manager was saying, we don't believe this is just the beginning in the commodities prices. They believe that, and it's a specialist resources fund, especially a private equity fund. These guys look at this stuff, and they're saying the market hasn't worked out, meaning the OEM market for the purchasers, worked out just how short the world's going to be for these products. So you and I think cyclical, yes, the lithium price, you might say that's going to come off because there's going to be oversupply, maybe, but certainly in rare earths. Tell me how many rare earths mines are going to be built, producers of our scale are going to come on stream in the next decade. Not very many.
What's the production bit that I think that's missing in all of this?
Exactly. So I think what we've got to adjust to, in answer to your question, is how much spot do we leave? Probably more than we would normally think, because there's still a lot of price upside.
Right. Okay. So what do you say to shareholders right now? We're in that kind of point in the old Lassonde curve. We're putting it together. When the money's in place, it gets really exciting. Is that the message?
No, not really, because the people that the people we're targeting are the people who see the thematic, what we've just talked about. And they see it as business. So the kind of shareholders we're bringing on now want more of the company. So as you know, there's a lot of mid-tier funds who will buy your stock because it's low, and then when they made the return, they'll disappear. We actually have funds who want to give us more money, who want to buy more of the business because they bought into the thematic. And they look around and they go, apart from MP Materials, you guys are the only ones building right now, and we can see the demand side. So therefore it's a shortage. Therefore we want more of you. So we don't have to convince them of that. What we have to convince them of is getting going, actually building it, making it happen.
What's the register look like in terms of institutional versus, family office? How do you split it up retail?
We've done of the 35%, I've just named them, there's another 10% is people such as myself, and I put quite a lot of money into the company buying shares, and other directors. And then there is what we call groups of discretionary investors. I've just got off a call this morning from a club of investors who are great. They're fantastic, and they have this hit list of questions. They've been following the story, and so they're committed investors or engaged. And then I would say, I'm guessing now, probably 30% retail.
Okay, still there.
Still there. As you know, we have to ultimately generate the buying because they'll sell. Yeah. We have to generate the buying to take them out. So we've done a really good job. So when I took over the company in 2018, it was all retail. All retail. We're now gradually institutionalizing the register. And we've just announced the appointment of Virginia Skrosky from the UK and the US, and Virginia and I are going to work together on continuing that institutionalizing the register. So it answers your question directly, is we want people in the company who want to own more of the company. Okay.
So we haven't seen you for a while. When are we going to see you next? What are you going to be talking about?
You'll be coming to Saltend when we commence construction in a few months' time, or hopefully a few weeks' time. and we'll have a breaking ground ceremony. We'll have a shiny shovel for you. And you bring the
for a sword or giant scissors.
Giant scissors, yeah. Well, whatever your implement of choice is, you can be on the ground when we
That's very kind of you. Lovely to see you. Well done. Great story.
Thank you very much. Nice to see you.